Peace. This is Wall Street Logic, and I am reporting on Foot Locker's earning results and their year-to-year guidance going forward in 2022, quarter four to quarter one. And we have some interesting news to talk about, especially for the sneakerhead community. So I'm going to read this article posted by CNBC this morning. As y'all know, I'm a heavy investor into the stock market, as well as Foot Locker is one of my stocks that I have in my portfolio. And let me tell you, this is going to be big. It's going to be big in two ways. One, Nike and Foot Locker, they're not completely separating, but they understand that they have to focus on what they have to bring to the table. And on a conference call today, they kind of explain this. So I'm going to read this article from CNBC, and it says, Foot Locker shares sink after retailer says 2022 sales will fall as it expects to sell fewer Nike products. Let's go more into detail. Foot Locker shares tumbled in pre-market trading Friday after the retailer said it expects revenue to drop in 2022 as it anticipates it will no longer be able to sell as many products from its top vendor, Nike. And the reason why is because Nike is basically rebranding itself. They want to sell more direct to consumers than, using other retailers. And they're going to talk about this right here in the article. Beginning in the fourth quarter of 2022, Foot Locker said no single vendor will represent more than 55% of its supplier purchases, compared with 65% in the year-ago period. On an annual basis, Nike purchases won't exceed 60% of the total this year, it said, down from 70% in 2021 and 75% in 2020. That's huge. Foot Locker said the adjustments reflect the accelerated shift by Nike to sell more of its sneakers and apparel directly to consumers. In turn, Foot Locker said it is ramping up its own direct-to-consumer efforts by launching a number of private label brands, including in clothing. Sneaker brands such as Nike and Under Armour have been very clear about their efforts to reduce reliance on wholesale partners. By selling through their own stores and websites, these brands hope to reap higher profit margins. That has forced wholesalers such as Foot Locker and Dick's Sporting Goods to launch more of their own lines. That is very important. It shows independence by Foot Locker, but it also lets investors know that, listen, we're changing our plan. We're going to change our brand since we can't sell Nike as much because Nike wants to establish itself, apart from its retailers or wholesalers. We're going to bring in private brands to sell, to push, so we can say that we have something of our own to market to our customers. So that's big. You know what I'm saying? It doesn't mean it's going to work out, but it does show that they are willing to kind of separate themselves from Nike to kind of establish what they have to offer. And the same thing on Nike's front, because Nike did this also with Amazon a few years ago. It started taking this product off of Amazon's website to kind of establish their own e-commerce system. So they rebranded themselves in that. That's why they had that blowout quarter in 2021 last year. I think it was around June when they had earnings, and their stock went crazy because they wanted to revamp their e-commerce and get more products directly to consumers, as this article is stating. So it's big for both companies, and, we should look forward to that. Now, that may be a problem going forward, with sneakerheads, but you shouldn't worry because they're only toning down a little of their products from what they receive. So it went from 75% to 55%. That's a big drop. But I don't think we have to worry about, getting, the hype releases as far as Jordans and Yeezys and stuff like that. I don't think we have a problem with that. We may, but for now, I don't see any issue. All right, so let's keep reading. So Foot Locker shares were recently falling 18% and pre-market trading amid a broader market sell-off. Its stock is down about 5% year to date. Foot Locker's net income for the 3-month period ended January 29th shrunk to $102 million or $1.02 per share from $123 million or $1.17 a share a year earlier. Excluding one-time items, it earned $1.67 per share, topping analysts' estimates for $1.44 per share based on a Refinitiv survey. Sales grew 6.9% to $2.34 billion from $2.19 billion a year earlier. That beat expectations for $2.33 billion. More concerning to investors was the footwear retailers' bleak outlook for 2022. Foot Locker said Friday it expects sales to fall by 4% to 6% this year, and same-store sales are projected to decline by 8% to 10% this year. And that's because the separation from Nike, Nike taking more of their products and selling it direct to consumer, and then also factoring in Foot Locker is going to miss that revenue, and then they have to also try to add in those private brands that they were talking about to kind of help, push sales more. And that's going to be hard going year to year, especially with the state of the economy right now, in these very special circumstances, But in the long run, they should be okay trying to rebrand themselves. Analysts have been looking for year-over-year revenue growth of 2%, according to Refinitiv. And that's before that they knew, they try to rebrand themselves. Of course, Nike, wanted to take some more of their product and sell direct to consumers online, their e-commerce business, and also storefront. So don't be shocked if Nike starts to build more retail stores. That could be possible. Or their e-commerce online business starts to grow and expand a lot more, and that should be, make a lot of, consumers happy. Let's finish this. So Foot Locker also said it will be lapping a period where consumers had extra stimulus dollars in their pockets to spend. That's a part of the COVID benefit they had where, everybody was getting all these extra money, from stimulus checks. And now that all that money has gone and dried up, it's kind of hard for them to, repeat what they did before in previous years. So now it's coming back down to earth. And the whole stock market has done that because they benefited from money printing and stimulus checks into the economy and consumer spending. Because you had people who never made this much money before the pandemic. Now they had all this extra money to spend and consume, and that, helped sales grow with these companies. And now, since that has dried up, now you can see, all these companies now coming back to earth. They're not producing the results that they did before because of all the extra money in the system. So now they have to go back to the drawing board to find out what will work. And I think this will be good for Foot Locker. So, yeah, they'll go through, a period of, sale declines. But like they said in their conference call and in this article right here, they're trying to revamp their own brand and bring in some private brands to sell to kind of replace what Nike, had for them. So they just dropped the percentage of Nike products that they're going to sell and going to give private brands some opportunities to put in their stores to, help them out. But that is all, guys. With me, I do collect sneakers, but I am an investor first. I am an investor. I am a day trader. That is what I do. Sneakers is something I collect. And I stay plugged into the stock market when it comes to these companies that we shop at, from Under Armour, Adidas, Nike, Foot Locker, all these brands. They all have a business sentiment that you have to understand. So you can't just look at the shoes and think that's the total picture when it's not. But follow me on IG at Wall Street Logic. Follow me on TikTok at Wall Street Logic 09. And subscribe to my YouTube channel at Chris Woods. And I will holler at y'all later. Peace. Okay, so I re-listened to the earnings call for Foot Locker, and there's a lot to take away that I left out in a previous video. So what Foot Locker is doing is big. Like I said earlier in the recording, it's going to be huge. This gives them a chance to put themselves on a bigger platform, bigger stage. Now, they still have a partnership with Nike, but, they basically are minimizing some of their products with Nike, and they're going to be promoting other brands like Puma, Adidas, Under Armour, and, some other brands as well. They also talked about their real estate portfolio, in which they're going to be downsizing some of their stores. So they will be losing 190 Foot Locker stores and subsidiaries coming this year and going forward. But they planned on building 100 more Foot Locker stores, new stores. Also, I think 27 WSS stores and 9 Atmos stores. So WSS and Atmos are companies that they acquired to, build up their brand. So that's another good thing that they spoke about and they talked about in the earnings call is, growing these brands, growing these stores. So they projected WSS to, make $1 billion in revenue for its first year. That's huge. So they also spoke about, because we investors, we ask them questions after the earnings call. They have a Q&A session. So somebody asked about, the Nike relationship. They still have a Nike relationship. They still have a partnership with Nike, but they're kind of rebranding themselves each and working together, where Foot Locker is going to take more of a bigger role from their side and start putting more effort into their business, just like Nike did with Amazon a few years ago to kind of, improve themselves, improve their direct-to-consumer business, e-commerce, online, to try to get as much product as they can to the consumers. So, sneakerheads, what y'all need to know is that these companies are not totally for your benefit, so to speak. It's more for the investors, because you have to have people willing to invest in your company, in your business, and their vision. So, yes, it's important for consumers and sneakerheads, but you have to understand the business side of these companies. So it's more than just, buying shoes, reselling shoes, whatever the case. It's more than just consumerism. So Foot Locker had a lot of declines this past year, but they still beat on revenue, and they missed on some things. They had some declines. And it's because the unemployment benefits, all the stimulus checks and stimulus money being pumped into the economy, given to consumers, that's not there anymore because of COVID. It's not severe anymore since businesses are open. The economy is booming. So all that money is dried up now. And now that Foot Locker doesn't have all that extra spending to make profits, they have to revamp to go forward to start making profit again. And it's all for all companies, Apple, Netflix, Amazon. You're going to lose money because all that extra money people are not used to having, has dried up and disappeared because there's no longer, a part of the daily life like we had before the pandemic. So now all that money is gone. So now you have to go back to the drawing board, find things that work, and fix those issues to get customers back spending. And it's going to be hard because the state of the economy that we're in now, which is bad, where you got shipping supply chain issues, we got inflation is crazy high. Prices are rising on everything from gas, rent, energy, everything is up. So everybody is having to spend more. So from the top to the bottom, from the business owners to the consumers, to the investors, and so forth and so on. So what Foot Locker is doing is great, though. They're rebranding themselves. They're, putting money into, these other companies that they acquired to build their brand. They're still going to be partnered with Nike. It's just going to be a little less product coming in now. So looking at, Jordan releases, that might be a major issue going forward. So we may not see, a lot of quantity on those type of products. So it may be limited on the Foot Locker side of the house. But I'm sure Nike is going to make up for that, with different, shot drops, sneaker passes and other stuff that, they may create going into the future. And I'm sure when they have their earnings, they'll talk a lot about that as well on their end. So Foot Locker got a lot of great things going on. Just listening to the earnings call, they also, talked about, some of their storefronts, what they're doing in other countries, launching certain pilot programs is really, really great. So even though their stock dipped, 20-something% today, I think it dropped down from $41 down to like $28. And it kind of rallied after hours or towards the end of the day. But there's no need to worry. If you're a Foot Locker investor or a consumer, things are looking up for them. It's just going to be a tough time right now trying to adjust, without all the, Nike support. They will get there and things will, be better going forward. So the next earnings, they're going to talk about a lot of the new stuff that they're launching and, stuff that they have for the consumers, their customers, and, investors. You can be reassured that Foot Locker is here to stay. They're rebranding themselves, and they're going to be right at the top with other retailers. And like I said, WSS and Atmos, two companies they acquired, will be essential to them going forward. And I'm sure they have some other brands, private brands, that they're also going to bring to storefront as well. Puma, Adidas, and other New Balance and other brands are going to start playing a lot more pivotal points in Foot Locker's branding going forward. So yes, they still don't partner with Nike, but some of the quantities are going to come down dealing with that. So I thought that y'all should know that. Very informative. Their numbers were good, but you got to recognize what's going on in the economy. So it's just not about shoes. It's also about the economic state of our country and the global financial system. And we got still dealing with inflation. Inflation is crazy right now. So going forward, keep your eyes open on, Nike and Foot Locker on some of the stuff that they will be doing. And that's it, guys. If you have any questions, I'm always plugged into the stock market. I'm an avid investor, a day trader. This is what I do full time. So, I try to bring this information to everybody. That way, we just don't be consumers. We also be investors and also stay plugged in with our economics and financial literacy. With that being said, follow me on IG at Wall Street Logic, on Twitter at Logic the Lion, and on TikTok at Wall Street Logic 09. Peace. I also want to add too that Foot Locker spoke about their relationship and partnership with GOAT. So be looking out for information and news about that, because they are going to start doing stuff with GOAT and ramping up their services with them as well. So, like I said, man, Foot Locker is on the up. Don't sleep on them. Yes, we understand that, they won't be doing Nike products that much anymore, but they still have a lot of stuff in store. But, that's the basis of where Foot Locker is headed. We will find out more on the next earnings call. So, again, peace, y'all. And get at me if you need any more information or if you have any questions. Peace.